Hello, welcome again. So in this part, we will solve the problem number 1, 2, and 3 from the problem set for chapter 3. So let's get started. So here, we are given on December 31st, 2024. So they have given us the cash, accounts receivable, inventory, equipment net, accounts payable, then salaries payable, interest payable, notes payable, common stock. Okay, so now we need to calculate the total current assets. See, we will calculate the total current assets and total current liabilities. So it should be easy. So total current assets should be equal to, let's see, so the cash is $35,000 plus, then accounts receivable is 30,000 plus, then inventory is 44,000 plus. Okay, do we have any? No, that's all. Okay, so which is equal to 109,000. Okay, and then we need to calculate the current liabilities. Okay, so current liabilities would be equal to accounts payable. So accounts payable we have 33,000 plus interest payable, that is 14,500 plus we have notes payable, that is 10,500. Okay, so which is equal to 58,000. Okay, we got it done. Let me give it a different color. So it should, okay, now, oh no, this is not good color. So how about this? Okay, this one is better. Okay, now come to the problem number 2. So the problem number 2, we have been given December 31st, 2018. So balance information accounts, so cash and cash equivalent in the accounts receivable, inventories, property, plant and equipment, net, accounts payable, wages payable, paid in capital. So only asset not listed is the short-term investments. Okay. And the only liabilities not listed are 30,000 note payable due in 2 years and related accrued interest of 1,000 due in 4 months. So the current ratio at year end is 1.5 to 1. Okay, that's fine. So we need to calculate the total current assets. So let's go to the answer. So total current assets. Now, first thing is, let's calculate the current liabilities. So total current, let me give it a different color so it becomes easy for us to view. Okay, to read, how about this? Okay, this one is good, different color. So total current liabilities, so it should be equal to, say, accounts payable 44,000, right? So 44,000 accounts payable. Then we have wages payable, that is 15,000 plus. See, interest, accrued interest 1,000. So this is our total current liabilities, and which is equal to 60,000. Okay, that's fine. And we know the current ratio, so which it would be better to insert. Okay, this one. So current ratio is equal to, so current asset divided by current liability, which is equal to the current 1.5, correct? So now let's see. So if we have 1.5, so see that, visualize that we have and 1 below the 1.5. So 1 multiplied by current asset and 1.5 multiplied by current liability. So it should be equal to, so current asset is equal to, so current asset is current liability multiplied by 1.5. So which is equal to, so 1.5 multiplied by 60,000, which is equal to 90,000. It means so current liabilities is equal to 90,000. Okay, I got it. No, not current liability. It's current assets. Sorry, it should be current asset. Okay. See that this is current asset. Current asset is equal to current liability multiplied by 1.5. So current liability we have 60,000. So current asset is 90,000. Now come to the question number 2. So in this part we will calculate the short-term investments. So we know that current assets. So current assets is equal to short-term investments plus other current assets. Okay. Now let's see how we go there. So current assets. So current asset is equal to C. Current asset is given 90,000. Okay, is equal to, so short-term investments plus, see that cash and cash equivalent. Okay, 5,000 plus accounts receivable 20,000 plus inventory 60,000. Okay, so STI, meaning short-term investment, would be equal to 90,000 minus, say 60, 20, 80, 85. So is 85 is equal to 5,000. So therefore short-term investment is equal to 5,000. Okay, and now let's go to the retained earnings. So to calculate the retained earnings, let's give it a different color again. So how about this? Okay, this is good. So we know that assets equal to liability plus student security, right? So if this is true, so assets. So what is our total assets? Total asset is equal to 90,000 current assets plus property, plant and equipment. So that is 120,000. So this is the asset, total assets. So and the liabilities. So we have current liabilities of 60,000. This is the current liabilities we have calculated. Okay, and then we have this 30,000 note payable. Okay, plus that is due in 2 years. So long term. So 30,000 plus we know the retained earnings plus we know the owner's equity, meaning the paid-in capital is 100,000. So it's going to be now. So retained earnings would be equal to. So retained earnings 210 minus, see 210 means 120 plus 90 is 210, right? Minus 60, 90. 60 and 30 is 90, so 190. So 190 is equal to, so 20,000. So therefore retained earnings is equal to 20,000. Okay, we got it. And now let's go to number 3. So in number 3, what we have given. So the following are the typical classifications used in a balance sheet. So the current assets, inventory, investment and funds, to property, so retained earnings, I. So for the following balance sheet items, use the letters above to indicate the appropriate classification category. If the item is contra account, place a minus sign before the, okay. So equipment. So equipment is property, plant and equipment, right? You got it? So this is C. Accounts payable. So accounts payable, current liability. F. No, not this. It should be here. F. allowance for uncollectible accounts. So this is an asset, but contra asset, because we subtract this allowance from accounts receivable. Land held for investment. So land held for investment. This is a B. B means investment and funds. And note payable due in 5 years. So long-term liabilities, right? G. Then deferred rent revenue for the next 12 months. So this is going to be current liability, F. And then the note payable due in 6 months, F again. Income less dividends accumulated. So this is going to be retained earnings, I. Investment in XYZ Corporation, long-term investment. So this is investment and funds, B. Inventories, current assets, right? So current assets, so it should be A. Current assets, okay, and then patent. So the patent is intangible assets, okay, D. Land. So the land is property, plant, and equipment, C. Okay, accrued liabilities. So accrued liabilities is current liability. So current liability is F. Okay, and prepaid rent. Prepaid rent, so current assets A. Okay, common stock. So the common stock, paid in capital, H. Building in use. So the building is property, plant, and equipment, C. Cash. Current assets, A. And finally, taxes payable. So taxes payable is a current liability, that is F. Okay, I hope you got it. Thank you and have a good one.